I'd like to welcome everybody to this update to the EIDL and PPP loans by the SBA Wichita District. And Wayne, if you could open it up and share your initial thoughts, we'd appreciate it.
All right, will do. Thank you very much, first of all, Greg, for coordinating this presentation. Really think it's going to be, beneficial for everyone that is participating, as our team has worked hard to really get a good grasp of the details around the Paycheck Protection Program, as well as the Economic Injury Disaster Loan Program. We appreciate all of your engagement and the work that you guys are doing. And I suspect there are probably a good number of business owners that are on this call. So we welcome those questions as we go through the presentation. Just want to say through yesterday at about noon, there were over 475,000 paycheck protection loans that had been approved, totaling over $52 billion. I haven't seen the updates for today, but the sense that I get is that the activity is proceeding fairly well. We've received a number of messages from lenders who seem to have some success with getting their applications submitted. So with all that said, again, thank you for the work that you're doing, and I look forward to the presentation as well. Thank you.
Thank you, Wayne. And Sarah, you're up.
Okay, so primarily what we're going to cover here is where we're at right now on economic injury disaster loans and those advances, kind of give you an update as to what the next steps are, and then of course the Paycheck Protection Program and how all of that interacts together. So Wayne kind of stole the first part of my presentation, but we're talking about a few numbers. Just if you hadn't seen this, this is on economic injury disaster loans and the advances, and this was as of April the 24th. So nationally, there were almost 39,000 loans, 202 loans in Kansas, $7.967 billion through EIDL. If you'll remember, that was a $10 billion program initially. Of that, 42.almost 9 million came to Kansas. Advances, and the advances weren't available in the first part of EIDL. The advances came about as part of the first version of the CARES Act, which allowed that up to $10,000 advance. So where we were on that, about 4.8 billion nationally put out in EIDL advances, and for almost 1.2 million advances. Kansas was just right under 8,000 advances received for $34.3 million. And then for our Paycheck Protection Program, so what we're going to talk about first is the very first round of funding, and then that's that ran out that Thursday, April 16th. Nationally, 1.66 million loans approved, $342.3 billion. If you'll remember, that was a $349 billion program. Some of that money is part of the fees and things like that. In Kansas, in the first round, was 26,245 loans for $4.29 billion. I'm not sure if anybody had a chance to see some of the charts that were put together, but Kansas, I think we were number 4 possibly in the nation for the number of loans per capita. So based on the population of the state and the percentage of loans, we did very, very well in Kansas. I know it may not seem like it for those that didn't get funded, but as a percentage of the population, we did well. And this is what Wayne just mentioned was the second round of funding. So that opened up at 9:30 Monday morning. And it was a bit of a rough start, but through noon yesterday, there were over 475,000 loans approved for more than $52 billion. This time, and we're looking at lenders by their asset levels. So lenders that had less than 10 billion in assets, they made 331,000 of those loans for nearly $30 billion. So those are your smaller of the banks, and then lenders with 10 to 50 billion in assets made 84,000 loans for $10 billion. Or yeah, for a little over 10 billion. So when we got the latest round of funding that became available on Monday, there were some changes that came with that. The additional funding for PPP was $320 billion. Of that, 30 billion was designated for lenders with assets of less than $10 billion. So if you noticed on that previous slide that I said that lenders with less than 10 billion had allocated nearly $30 billion. So essentially they used up their set aside money in the first day. And 30 billion was also designated for lenders with assets between 10 and 50 billion. And what this means is that money, we made sure that it went to smaller banks, but that does not mean that they don't have access to the full pot that everybody else does. It's just that the larger banks with greater than $50 billion in assets did not have access to this $60 billion in dollars. The other part of the CARES Act this time is that we did receive more money, more funding for the economic injury disaster loans. It was a $60 billion total. 50 billion of that goes to the loan program itself, and 10 billion was set aside for advances. The other change to that is that agricultural enterprises are now eligible for EIDL. If you'll remember from trainings before, that the only type of agricultural enterprises previously eligible for EIDL were aquaculture and small agricultural cooperatives. So now this is opened up to traditional farmers and ranchers and other ag operations. So what does that mean right now on the current status of our EIDL and advances? So SBA has resumed processing EIDL loans and advances. And actually, I would almost speculate that we really truly never stopped. We just couldn't fund anything else. But what we're doing is we are working on the ones that were already in the system where people had already applied. And we're doing those on a first come, first served basis. As of right now, we are not accepting new applications for EIDL. We are working on processing the ones that are already there, and then I would hazard a guess that we're also working on updating application forms and systems, because now, whereas somebody would have chosen a NAICS code that placed them in an agricultural operation, that would have made them ineligible in the past. So we've got to change eligibility requirements. But we are not yet taking applications for EIDL, and we will get the word out as soon as we are again. When we do resume taking new applications, it's going to be going to the same site for the online portal, and you can get to it by going to sba.gov/disaster. So when thinking about what we were going to put together for today, wanted to kind of focus on what we hear the most all day and every day from small business owners. And it's this right here. I've applied for the EIDL loan and the advance. So now what? I haven't heard anything from SBA. The first thing is that we don't have the ability to check your status of your application. And that's not only locally, but at this point right now, it's also with the Disaster Customer Service Center. So we do have a phone number that you can call and an email that you can call, but they're going to tell you essentially what I'm telling you right now. If your application begins with a 3, it is currently being processed. And we know that those applications were sometime toward the end of March through the time that we ran out of funding. I believe it's at least through the middle of April. So if you have an application that begins with a 3 that you put in through that new portal system when it became available, requesting the advance, then your application is currently being processed now. You are not going to receive any communication from SBA at this time. What you may find happens is you may notice a credit inquiry. If you have a monitoring service where you kind of keep an eye on who's running credit on you, you will see one. Because EIDL loans do have a credit score requirement. The Paycheck Protection Program does not, but for EIDL, we will run a credit history on you. If you are approved for an advance, it's just going to show up in your bank account. You're not going to get an email or a phone call or any kind of warning. It'll just show up. And it's going to be in the amount of $1,000 per employee as you reported on your application form when you put in your number of employees you had prior to January 31. And that's $1,000 per employee up to a $10,000 max. So you may get the advance, and when you do, you still will either be approved or declined for the full loan. So I've heard from various business owners, sometimes it's a few days after getting the advance that they have this email from SBA, and sometimes, it's a week or longer. I really don't know what the time frame is, But if you are approved for the loan, and it may be a week or longer after you receive the advance, you are going to get an email from SBA at this point. And I've included a little picture here of what that email looks like. It's going to be inviting you to create a loan portal account. Now, the thing to remember is that this is unique to you. You cannot share this with your friend to get them to check the status of their loan. This is only going to work for you. But you will have this email. It's going to tell you to create an account in the loan portal. So once you get into the loan portal, you've created your account, this is what you're going to see. And it's going to give you a range up to your a minimum of, I assume it's $1,000 for everybody, but a minimum amount and a maximum amount. And it's going to let you slide along that scale and choose what you want your loan amount to be. As you do that, you're going to see below, you've got a loan breakdown. So these are the things that are the same for everybody. All loans are 30 years. They're all at 3.75% interest. They're all payment frequency is monthly. You have 12 months of deferred payments. There's this third-party filing fee, and then it will show you your payment amount. And as you make those adjustments, you'll be able to see how that affects your payment amount. So once you choose the amount that you're interested in, and you will go to accept it, it's going to move you on to the next stages of processing your loan. So when you've confirmed it, you'll see right here, you've got your amount confirmed. And in this case, it's $500,000. You have the option here to go back and change it if you want. But your next step really should be is submitting for processing. You'll see that there's other things down here that you'll have to do, verifying your identity, your electronic disbursement. So that's going to be where you provide your information of where you want the money to go. And then the very last step is sign your closing documents. But the next step you should do at this point is you should submit that for processing. At that point, you should receive communication from a loan processor. They may be asking you for more information or available to answer some questions from you. And then once your loan package is complete, you're going to return, get notification, you're going to return to the portal to sign your closing documents. Once all of your documents are received and you've signed everything that's needed, funds are to be dispersed within about 5 days. So what if you get the advance and you don't receive the email for the portal? You still could be declined at any point in the process for the full loan. We have some really standard reasons for decline, and I've listed them here. And as I mentioned before, that credit history is one of the first things that we check. So you could be declined based on credit. It could be that you don't have an eligible business activity. So previously that would have been agriculture, which will now be allowed. If you're delinquent in child support by more than 60 days, if you don't have economic injury substantiated. So let's say you said you had 6 employees and you get an advance for $6,000, but the records you provided or the figures you provided with your 12 months gross revenue and 12 months cost of goods sold, if that doesn't demonstrate that you have a need, and the $6,000 or the $6,000 is more than we would offer you for a loan, then it'll be declined for the full loan. Character reasons, so this is going to be things based on criminal activity, probation, parole, convicted of a felony recently, if there's any sort of unverifiable information that you provided, or if you withdraw or fail to proceed. So we've had the question come up, if I get that email inviting me to come and create an ID and sign into the portal to look at my loan documents, how long do I have to respond to that email? And that part, we don't know. I've asked the question, but I don't know what the time limit is on failure to proceed. But I will tell you that if you are declined for any of these reasons, you're going to receive either an email or a letter through the post office that's going to give you those, tell you why you were declined, as well as give you the options to request reconsideration. You have 3 months from the time that you're declined to request reconsideration. So that's EIDL kind of in a nutshell on where we are right now. Let's swap over to the Paycheck Protection Program. So eligible businesses, these are most businesses including nonprofits, farmers, ranchers, any other kind of ag industry, and recently, with some recent changes, also those that derive income from legal gambling. We had some restrictions in place before that you couldn't have more than a certain percentage of your income from legal gambling. Those restrictions have been lifted for PPP, and so now essentially something like a casino could potentially be eligible if they meet the other size standards. Hospitals, this is one that was a little more difficult during the first round of PPP funding because of hospitals. A lot of them have the 501c3 status, but are also partially related to a government entity. So we have clarification now that hospitals, whether they are a business concern or a nonprofit, as long as their funding, less than 50% of their funding is from state and local government, not counting Medicaid, they are eligible to apply if they meet the size standards. Businesses that are not eligible are financial service type businesses. So when you think of a paycheck, payday loan type place, or you think of somebody that does strictly investments or makes loans somehow themselves, in some cases pawn shops if they don't derive more of their income from retail sales. Those are not eligible business types. Marijuana businesses, and these are going to be growers and sellers, they're not going to be eligible. And then businesses that are of a purient sexual nature are still ineligible, even though we've had some changes for things like the nonprofits and the gambling businesses. The other thing where we're a little bit unclear at this moment is self-employed in businesses that are too new to have filed a Schedule C for 2019. So think, for instance, something that started in December or January of this year. Even though if they were in business on February 15th, we know that they are eligible, there is no guidance at this time available to determine their loan amount. And the IFR states that SBA will provide guidance, but we do not have that at this time. And so there's no way at this point for a lender to determine your loan amount if that applies to you. So speaking of loan amounts, how do we calculate it? So it gets a little bit in the weeds a bit through here, but we'll go through it quickly. For self-employed people with no employees, the simple of it is it's line 31 of your Schedule C, which is your net profit. All of these are going to be capped at $100,000. That's the same employee cap that is in place for any other type of business, but it's capped at $100,000, and that is wages. That does not include things like benefits and things like that. So what we're looking at for self-employed people with no employees is the first thing we're looking at is what is your average monthly net profit. So that's line 31 divided by 12. Then you multiply that by 2.5 and you get your maximum loan amount. Again, because of the $100,000 cap per employee, then that max loan amount basically ends up being $20,833. So on self-employed with no employees, how is the forgiveness done on this? So the maximum amount that a self-employed person can take as owner compensation is 8 weeks of their net profit. So again, we go back to the line 31 of Schedule C from 2019. You're going to divide that by 52 to figure out what your weekly net profit was and multiply that by 8. That is the max amount you can pay yourself as a self-employed person, is 8 weeks of that owner compensation. So again, based on the $100,000 cap, the max owner compensation is $15,385. Now, what you can do, because you see above that the max loan amount is more than that because of the 2.5. So you've got other qualified expenses that a person could use these loan amounts for, and it's up to 25% of the loan. But the thing to remember on self-employed that are claiming other qualified expenses, they have got to be expenses that they either claimed a deduction for on their Schedule C or that they were entitled to claim a deduction for. And the only thing that that's going to include is going to be mortgage interest payments, and that could be on any kind of real or personal property, business rent, business utilities, if a service agreement was in place before February 15th. And although you can use the proceeds for any other interest on debt, it is a qualified expense, so you're allowed to use it for that, but it's not forgivable for that. One thing I will point out here is that when you do these calculations, and we've worked through it every way possible, and it's even this way in the IFR, when you do these calculations on what the 8 weeks is over the 2.5 times to get your max loan amount, you're only going to come up with 73.8% of income for the owner compensation. So it's not hitting that 75% that's required by the IFR to get forgiven, but it's not possible to get that based on these caps here. So when you do the math as it is written out in the IFR, they actually get 73 point something percent as well. They round that up to 74, then they further round it to 75. So what we're asking for here is some clarification, because it is not possible for a self-employed person to get actual 75%. A self-employed person with no employees, I'll put it that way, it is not possible for them to get 75% of payroll because of these caps that are put in place. So we do expect further guidance coming on that shortly. So what if you're self-employed with employees, but this does not mean partners in a partnership? So it's the same calculations before from the previous slide, where you come up with what your net income is on a weekly basis. You're going to add in your your payroll expenses for your employees. So just quickly, because this will be the same through all of them, what counts as payroll? That's going to be your gross wages and tips for every employee, but it's capped at $100,000 per employee. You cannot count any employees that do not have principal residence in the U.S. They don't have to be U.S. citizens, but they have to have their principal residence here. You will add to that your employer contributions to health insurance plans. You'll add to that your contributions to retirement plans. And then you're also going to add to that state and local taxes. And this is primarily going to be the unemployment taxes. So you add all of those things together, include in your net profit amount, and then you're going to divide the total of that by 12 for your monthly payroll times 2.5, and that's going to be your max loan amount. So whatever your net profit was for 2019, capped at 100,000, you'll put that there. But then remember, when it comes to what you're allowed to pay yourself, you're going to have to go back to that calculation of taking and finding out what your weekly net profit is, and you have to limit yourself to 8 weeks of that net profit, or a max of 15,385. So how about other types of businesses? So we've gotten a lot of questions about farmers. Farmers, the same rules apply. You're just going to use Schedule F, line 34, in place of Schedule C, line 31. One thing that I did not put in the slides, but I need to point out here, now is probably a pretty good time to do it. If you, on your line 31 of your Schedule C or line 34 of Schedule F, if that number is 0 or negative, meaning that you either had no net income or you declared a loss for 2019, you are not eligible for the Paycheck Protection Program. So I know that potentially could impact quite a few farmers. But if that is 0 or less, you will not qualify for this program. The other thing I want to point out too is that if you have not filed your taxes yet for 2019, you still must complete your 2019 Schedule C or Schedule F and Schedule 1 to submit with your loan application. So you need to go ahead and put those together like you are filing your taxes. Partnerships are a little different again. And so partners cannot apply individually. They have to apply together. Part of this is because expenses for the business are generally incurred at the partnership level, not with the individual partners. So same kind of thing, you're going to be looking at a Schedule K1 in this case, and it's going to be box 14A, which is your net earnings. There's also some reductions that you'll have to take out of that. And then you actually have to multiply that by 0.9235 because of the employer's share of the self-employment tax. So as you would have seen in the previous ones, if you have employees, you're not getting to take credit for some of those taxes that are employer share and not on federal taxes. So you're going to do that. So your K1 box 14A, and then it's adjusted for these things. Again, it's a max of 100,000 per partner. Then you're going to add in your 2019 payroll expenses for employees. Those are all the details we just talked about. And that equals your total 2019 payroll expenses divided by 12 for your average monthly times 2.5, and that's your max loan amount. S and C corporations, all of the same previous guidance. It's pretty simple on these. Total payroll expense divided by 12 times 2.5. Nonprofits are going to be the same, but where we don't have clear guidance is on a nonprofit. I had this come up today actually. On a nonprofit that does not have employees, but the owner takes a form of compensation through a billable service. So I have a feeling that that's not going to work. They should have been doing either payroll or some kind of 1099. But in any case, I'm not sure what they're going to do with those situations. And then for LLCs, you're going to need to pick one of these scenarios that we've already given that best fits your tax filing situation, whether you're sole proprietor, self-employed, however your tax filing is. And then yesterday we got new guidance on seasonal employers. So what we already knew is that we're looking at for a 12-week period, February 15th or March 1 if they're a later season, to June 30th, 2019, looking at what the payroll was during that time frame. But we do know for later season businesses that wasn't working. So at this point now, you can use, to calculate what your payroll is, you can use any consecutive 12-week period from May 1 through September 15th of last year, or the February 15th or March 1 start to June 30. So what are the lenders going to ask for you to document these things in your payroll? So lenders are going to ask you for what they need to be comfortable, but some of the common things that you may need to provide them. So of course it's going to be your schedule, whatever applies to you, whether it's CKF, one of those. Your IRS Form 941s, that's your reporting your payroll. And if you don't have those W-2s, W-3s, if you have a payroll processor, you can use reports from there. If you have quarterly or annual tax reports. Also, they may ask for, depending on your situation, the 944 for very small businesses. And then for farms, it's going to be more likely the 943 for agricultural employees. And then you also can get records from a retirement administrator if you have a self-insured plan. To prove what your contributions to a retirement plan are. So if you receive the PPP funds, how should you use them? We do expect a lot more clarification on some of these complicated forgiveness issues, but what it boils down to is 75% of the funds you receive through PPP must be used for some form of employee compensation. And that's a combination of all the things we talked about. That's, health insurance, that's retirement. It can be used for separation pay if that's needed. But it has to be payroll type expenses. And then of course, qualified business expenses. But remember, self-employed people, that you have to have qualified for a deduction on those on Schedule C. So you've got mortgage interest, rent, utilities, interest on other debts. And if you so happened to have gotten an EIDL loan before April the 3rd, this is not the advance we're talking about, this is the full loan. If you had received an EIDL loan before April 3rd and you used that for payroll, you need to, your lender needs to refinance that into your PPP loan. I have not had that situation happen yet, but it's possible. So when can I use the PPP funds? And this comes up a lot because of the current state of businesses not being open. But the PPP funds, you are to begin using them immediately for the 8 weeks beginning on the day you receive the funds. You cannot delay if your business is still closed due to local orders. or if your staffing is reduced because you're doing some form of limited service, you have to begin using those funds for employee compensation immediately when you receive them. And I know there's a lot of angst over that, but that is the purpose of this, is to make sure that employees are getting their pay as well as their benefits during this time. Um, Lenders have to make, and this is effective as of yesterday, so there'll be some time to make corrections, but lenders have to make one single full disbursement. There's no parsing it out a week at a time or a month at a time. They need to make one full disbursement within 10 calendar days of receiving the loan number from SBA. And then the borrower essentially, if they have to provide other documentation, signatures, that sort of thing to the lender, and they do not do so within 20 days of the lender receiving that loan number, then the loan's going to be canceled. So the lender basically has 10 days to get it to you. If you don't provide what you need or what the lender needs to disperse, there's another 10 days on top of that. And then after 20, your loan is canceled. So the other things to keep in mind about PPP funds and being able to qualify for the forgiveness. So remember, this loan can be forgiven if you use it properly. You have to maintain your full-time employee count equivalent based on the average of your FTE count, either the 12 months prior to you getting the note, or your FTE. You can do your average FTE count of 2019. Or if you're a seasonal employer, the same time frame that you had in 2019. So whatever 12 consecutive weeks you're choosing, you have to maintain employee wages, and what that is within 25%. You cannot cut pay by more than 25% at this time. If you did have to make staffing level changes between February 15th and essentially now, you do have some time to rehire and get your FTE count back up. If for some reason you cannot maintain your FTEs or the wage amounts, then the amount of your forgiveness is going to be reduced, and that portion will become a loan. How we go about doing that, or if it's straight prorated, we don't know yet. We're waiting for additional guidance. So those are a couple different programs. So how can you use them both together? So economic injury disaster loans, they're basically there for your financial and operating expenses, whereas PPP is primarily for payroll and a few operating expenses. EIDL is $2 million, 3.75% interest, or 2.75% for nonprofits. That is a loan. It is 30 years, 12 months deferred, while the Paycheck Protection is 1% interest, 6 months deferred, and it's a 24-month or 2-year loan. Again, the Paycheck Protection Program funds are forgivable if you use them properly, and EIDL is truly a loan. The advance can be forgiven, but the loan will not be. So a thing to remember, another way that they interact is the advance on EIDL is $1,000 per employee, up to $10,000 max. And if you get whatever you get on your EIDL advance, that's going to reduce the amount that can be forgiven on your PPP loan. So if you have a $100,000 PPP loan and you get a $10,000 EIDL advance, basically the max amount you qualify for forgiveness on your PPP is $90,000, which would make 10,000 of that becomes part of a loan. So if you have both of these loans, how do you use them together and keep yourself out of trouble? It is really, really important, I can't stress it enough, that you must use your PPP funds for payroll and qualified expenses first over the 8-week period before you use EIDL for anything similar. EIDL is has a lot more flexibility. You can use it for things like your inventory needs, other services. You can use it whatever those expenses are that keep your business going on a day-to-day basis. PPP is a very limited amount of things you can use it for. So make certain you're using it for those things first so that you can get the forgiveness. PPP can be used to pay debt interest only. You cannot make principal payments. You can do no prepayments. EIDL you can use to make principal payments. You cannot do prepayment on any debt for either one of them. So there are a few other relief programs out there that you need to be aware of, and if you've taken advantage of some of them and how it might impact. So for PPP, if you have gotten a qualified credit for sick leave under the Families First Coronavirus Response Act, you cannot receive forgiveness for any sick leave you may pay for under PPP. So keep in mind, if you took the credit or are going to take this credit, those two, you can't use it for both things. IRS has a credit out there, and it's an employee retention credit. So you can get a tax credit for 50% of qualified wages up to $5,000 per employee, but you cannot then use PPP to pay that employee. So those two are not compatible. It's going to be one or the other. This may potentially be a good fit for, well, I'm not going to speculate. So anyway, but just keep in mind those two are not compatible. And then I want to also make sure that you're aware, for any of the any borrowers that already have an SBA product prior to PPP. So whether that's, one of our 7A programs like a 7A Express or a export working capital loan or a 504 loan with one of our CDC partners, SBA is going to be making, or just started, I believe the first payments went out today. SBA is making payments to the lenders on behalf of the borrower. And that's the full payment. It includes your principal, interest, and any of the borrower fees that are due to the lender. We're going to make 6 months of those payments on behalf of the borrower. The other thing the borrowers can do is request a 6-month deferment of payments on those loans. And for any borrowers that have already requested the 6 months of deferment, SBA can pick up and start making 6 months of payments to them at the end of the deferment period. There's also an option for them to end their deferment period early, but it will take further examination to determine whether that'll be allowed. And then finally, for any new 7A or 504 loans that are made from now through September 27th, they're also going to be provided these same debt relief benefits, including 6 months of payment by SBA. So we do know that there are, maybe not many, but there are businesses that do need to expand during this time. They need additional space, or they need additional employees, or they need additional inventory because they're building PPE type equipment. And they need the funds to expand. And so this is where these programs could be good for those that are actually experiencing a growth right now. They can access these again through an SBA lender, and it'll be a standard loan process. It won't be as quick and easy as what the Paycheck Protection Program is, but these funds are there; they're available, and you can get deferred payments as well as SBA will make the payments on your behalf. And Greg, with that, that's my overview. And I think we have time for questions.
Let's go ahead. Do you want to answer the ones that have been posted, or do you want to take more?
Sure, we could do ones that have been posted, but I can't see them.
Oh, okay. You can't see.
Let me see. Let me get out of this, and I bet I can see them. I'm going to stop sharing.
I've answered a few of them, but there are a couple.
There's questions and answers in chat and
okay, now I see. I had to get out of my thing. All right, let's go through these. So I'll look at the ones that are in the Q&A right now. Do you want me to just read them and answer them?
That'd be great.
Okay, so the first question I see is, are applicants allowed to apply for a lower amount if denied for the full offer? I'm going to guess that this is probably on EIDL. So in the case of EIDL, actually in the case of either one of these loans, you're not requesting a loan amount, we make you an offer. So if you're denied for either one, you essentially would have to request a reconsideration. I would not say that you need to reapply. I think you should request reconsideration. Let's see. I'm self-employed and I don't take a salary and I'm not issued a W-2. Will my business qualify for the disaster assistance program? Yes, it would qualify for either one, but it's going to be based still, you're going to have a Schedule C or something along those lines. For economic injury, um, you'll need to know what your gross revenue was for 12 months because that's more of an operating expense situation. For PPP, you'll need something to prove what your net income was. So it would depend on how you file your taxes. Let's see. How is a business considered small and eligible for funding if they have between 10 and 50 billion in assets? So that's not the business, that's the banks. So what we're saying is we're looking at what the bank has in available asset, what their asset level is, to determine what size of a lending institution that they are. Those are definitely not the businesses. That's just with the banks so that we could set aside money for the banks that they can lend to their clients, because typically what you would see with a bank that has, you know, less than 10 billion in assets is that they're going to have smaller customers. In fact, today the agency announced just a little bit ago that from 3 o'clock our time until 11 o'clock tonight, the processing system is only going to be available for banks that have less than $1 billion in assets. So those are going to be the smallest of the community banks. And the reason for that is they have more different, first of all, they're typically in rural areas. And so their connection speeds are not as great often to our systems. And so they have a hard time competing with larger banks that have T1 lines and have, you know, automatic processing systems in place to help them get their things entered faster or easier or with less human error and interaction. So what we're trying to do is set aside so that we know that banks in rural areas, and they're smaller and having the smallest customers, making sure that they have access to the processing system to get their approvals. Because while we say that it is first come, first serve, we find that people, if they're not able to access the system, then their customers as a whole get left behind. So it's just a balancing act of trying to get everybody access to the system. Let's see. If someone applied and received a PPP loan during the first round and they received an advance on the EIDL funds after receiving the PPP loan funds, what does the bank need to do? So we hope to have further guidance on what you're going to require for documentation. But essentially, when it comes time for the borrower to apply for forgiveness, you'll have to reduce the forgivable amount by the amount of their EIDL advance. Let's see. What did she say about no prepayment? You cannot use the funds from PPP or EIDL, either one, to prepay any of your existing debt. So let's say you have an auto loan that you use for your business. And so it's a business expense and you pay, have your auto payment every month. You cannot use these funds to pay that loan off. You can only use PPP to pay the interest on that loan. You can use EIDL to pay the interest as well as the principal. So you can just make a full payment with that, but you cannot use either one to pay it off. Let's see. 202 EIDL loans seem very small. Why was Kansas only approved for 0.5% of all the loans? Kansas. So if you look, when you look at the chart of who got what when, you will see that Washington State has the highest percentage of the EIDL loans, the highest number as well as highest percent. Washington State was the very first state that had a disaster declared through this process. So if you look through, and because it's, it was first come, first serve, and this was not a blanket disaster declaration for EIDL purposes, every state had to apply. And as part of that process, some of you may remember or may have participated, you submitted economic injury forms to the Kansas Department of Commerce, which went to the Department of Emergency Management, so that the governor could issue a formal request to SBA for a disaster declaration. So all 50 states got a disaster declaration within a week, but Kansas was, I think we got our declaration on maybe like a Wednesday or a Saturday, I think. So we were probably maybe 4 or 5 days in, when the state of Kansas received its declaration. So all of the states that were declared before ours had access to these funds before Kansas did. Let's see. Can the EIDL loan be prepaid if you don't end up needing the complete 30 years? Absolutely. So for the EIDL and PPP both, if for somehow that comes up, but there are no prepayment penalties on the SBA loans. So at any point you want to pay it off, you absolutely can. And especially if things turn around and we get our businesses back opened and things are looking good and like the economy is turning it around and it's going to stay that way, then absolutely, you can pay it all off. You can take whatever funds you didn't use. If you still have funds that you received, you can always take those and make a big payment. So yeah, there's at no point, there's absolutely no prepayment penalty on an SBA loan. Pay it off when you want to. If we are approved once, are we able to get the loans a second time? I'm going to say, okay, so I'll answer this 2 ways. For PPP, no. Every person can only have one PPP application. So you cannot get another one. You cannot get more than one loan. If you're talking about EIDL and you were approved, it's still only one loan. But if you find that you need more funds, you can go back during the open period, which is through December 30th or 31st of this year. You can go back and request an increase on that loan. Okay. So here's a question that I don't really have the answer to right now, but in the last presentation, the EIDL portal was down and we recommended getting a paper application, completing it and mailing it to Texas. So the answer is yes, the applications will be processed, but what we cannot tell you is the time frame. We know that paper is slower, of course. I don't know where they are in that process. We don't have any information at this time. We do hope that we'll know more soon, but at this point, we just don't know. Yes, they'll be processed, but our concern is that the ones that were done through the portal are going to be processed faster. So, okay. And I don't see any more in the Q&A.
So I'm going to suggest that what we do is go ahead and include the Q&A, send the Q&A out separately from the PowerPoints. We'll send the PowerPoints out tomorrow morning and follow it up as soon as possible with the questions and answers. And it'll be available not only on in the email, but we'll put it on the Kansas SBDC website for easy access and recording. Does that work for you, Sarah and Wayne?
Absolutely. Yeah, sounds great.
Great. So for the entire group and all 90 some people that have participated, thank you very much for joining us today. If you have questions or feedback, we'd welcome it and look forward to hearing from you. Thank you.